The China stimulus causing Chinese stocks to surge leading up to this week's Golden Week holiday. It's the second largest weekly inflow ever to China equity funds. But does the rally have more room to run, or is it already too late for investors? For more, we're bringing in Wang. He is Chief Emerging Markets and China Strategist at Alpine Macro. And I guess we should start with what you think of what the Chinese government has announced and whether it is going to be effective in sort of juicing the economy. There's been some debate over that. What do you think?
Sure. So I think if I were to summarize what has happened, I think mainly 3 points. Number one is they announced a kind of flurry of measures over the past couple of days. It's even difficult for us to keep pace with. So clearly that shows they are in a state of panic. They are, clearly feeling the pressure that the economy is in a very deep, very stressed level. So they want to try to push the economy accelerate. Number two is clearly, to me, I think the most important takeaway is they no longer see massive stimulus as a taboo, right? So if we think about it, in the past, basically, since the global financial crisis, they were saying that they would never repeat the massive stimulus programs that they did during the global financial crisis. So I think that's one of the reasons why they hesitated so much in the past couple of years, even though the economy was slowing down. So now, clearly, that kind of what I call ideological straitjacket has been taken off. So that would allow them to be more preemptive in driving the economy. And I think that the last point would be now clearly they made the policy statement, and then the market has responded. Then it's just for as an investor, we need to begin to monitor whether these kind of policy measures will have some kind of positive impact on the economy. And that's something that, as a strategist, I think we need to realize that, whatever they announce is one thing, but also whether the economy is able to respond is quite another. So I believe the reflation trade has further to go, especially if they think they no longer believe in, they don't want to massively stimulate the economy. That means if the economy does not improve, they will have more measures to come.
Yeah, some strategists on Yahoo Finance were saying they really can't call right now whether what's been announced, what's to come, is going to meaningfully impact the economy and the markets. But you heard them make an evaluation call. Their point was, regardless, these names have just been so beat up that they're now attractively valued. They have priced in a lot of bad news. Do you agree with that?
Oh, absolutely. I think if you look at really globally speaking, the main asset classes, we have two extreme valuation outliers. One is China, the other one is the US, right? So, but if you look at DM excluding the US and EM excluding China, these two asset classes actually, their valuation, like for example, these two markets, they're trading at around 15 times forward earnings. China now is trading at around 10 times forward earnings. US is trading at 22 times forward earnings. So I think from that point of view, clearly there has been a massive amount of bad news priced in the Chinese stock market. I think back then people were, basically were pricing for a constant growth deterioration policy. Beijing would never do anything to support the economy. So I think that expectation now has been priced out. But I don't really see the re-rating is over because the valuation gap is still so huge. So let's say if China is not able to achieve the valuation exceptionalism that the US stocks have, if China barely catches up to EM average level or to DM average level, then we have another 50% increase from here.
And when you're looking at China, if you think there's more upside there, do you just buy the whole market, or are there areas that are going to be more and less attractive?
Yeah, so I think at this moment, the benchmark, I think it's probably the best bet is just to buy the benchmarks, buy the domestic benchmark and also buy the MSCI EM China benchmark, because so my view is, the rising tide will lift all boats, right? So the market across the board, the market's stock prices are very, very cheap. But if I have to bet, I have to pick some sectors, I would say to buy the laggards. the sectors that have been really beaten down in the past couple of years. For example, consumer discretionaries, tech sector, even the property developers, they are trading at such depressed levels. I think they may benefit the most from this reflationary process. But other than that, I think just by the benchmark, I think it's easier and safer bet.
Yen, thank you so much for joining the show today. Appreciate your time.